presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man Al in Homosassa. What's going on, brother?
Isn't it wonderful? I went ahead and invested in your Tiger dollars, and I went ahead and got the gold report for a year, and also your morning, your call letter and stuff like that. And I got over a 50% return in one day, not counting everything else. But I just want to thank you. Tom's not perfect, but he tells you how to put your stops in, and he keeps your losses small. You can take your small losses, but then all of a sudden you'll be like Babe Ruth, and you'll hit a home run. I mean, a big home run.
Yeah.
And put the money in your pocket.
Okay, brother. You're awesome, man. Thank you.
Now, Tom O'Brien.
What's going on, everyone? This is Jacob Shoup. You're watching the Tom O'Brien Show. I hope you all have had a good day. We, of course, streamed a little bit of what Powell was saying at the New York Times event, and really nothing insane or novel or enlightening in any real capacity. But the Beige Book is out, which we'll talk a little bit about that in the first segment here. But first, let's take a look at what we got going on in the market right now. You have the composite trading about 1.18% at 19,710. Again, big movement up today. For sure. Let's take a look at the Dow Jones Industrial trading up about 0.64% at 44,993. You have that dollar trading off about 0.11% at 106.33. Crude oil trading off 1.6% at 68.82. Some really interesting stuff with crude oil, right? I was actually just talking to someone about this the other day. But, obviously in America, we are drilling. We are the largest producer of oil, producing more oil than ever. Not just oil, we're digging for natural gas, all these kind of things. We have so much shale that we can get into that we're not in currently. And we were discussing kind of the reason why gas prices were so elevated about 4 years ago. And I had kind of remembered there are these people had a political explanation for it, right? And I remember being like, it's not because someone else got into office, the amount of production that we're doing is still stable, right? Someone else must not be, producing as much, and that was OPEC. So OPEC had been producing a lot less for whatever their reasons are, for that. And now they've gotten to a point where we have tried to meet that kind of void, and we really have been to the point where it's almost like they can't even increase outputs at this level to be profitable. Of course, we heard Iran talking about that. Regarding OPEC Plus. So kind of an interesting realm, and we'll see, if we get into a new cycle with oil going forward. I really want to talk to, have Teddy Keckstad on the show. If you guys aren't familiar with Teddy, he comes on every Wednesday with Tommy O'Brien. He is the author of the Tiger Forex Report on TFNN. Fantastic newsletter. Really recommend checking that out. Again, you can go to, right here, I'll just show you. You go to TFNN.com. You can go right to the newsletters tab. You scroll down here, and this is the Tiger Forex Report by Teddy Keckstad, and it's pretty solid. We got to get him to do a webinar pretty soon here at some point as well. Let's take a look right now. We have we have all my watch lists getting jumbled up. You have the SPY trading up about 0.56%. Whoa, at 607.30. Look at that. Very nice move for the day. Tesla coming up a little bit. I don't know if it found kind of a bottom in this area of consolidation. Obviously, still a lot of volatility, at least price-wise. Still trading up 0.54% today at 353.27. Take a look at this. Qubit again. We're talking about that, oh man, up 13.29%. It's trading right under $7. This is the whole thin film lithium niobate. We talked about it yesterday. I was talking about it a few weeks ago because it just seemed like it was getting some nice bids and everything was getting pumped. And, one of the things that's super important to understand when you're seeing things like Archer blow up and stuff like that, right, is these are usually getting pumped in a major way. So if you're getting in right here, you can do this. It's cowboy and you can make money off it, but you need to be very, very sensitive and really have like a trailing stop if you're getting into things like this. Qubit wasn't really memed at all the way that Archer was. But regardless, the play would have been the same, right? They only had 2 customers. Turns out that they were kind of maybe overstating the order size, or rather the importance of the order in a major way. We went through a report yesterday from Iceberg Research saying that not everything is as it seems. They are supposed to have a fabrication plant coming out in Q1 of 25, like our Q1 of 25. And it turns out that where the location is doesn't really, is not enough space to hold something like that. Very bizarre, right? Additionally, I did some further digging on it as well, and they only spent about $2 million getting foundry equipment, which is certainly not enough to be commercial at any capacity. It's much more research oriented in a major way. So I called the park, an Arizona Research Park, I believe is what it is. It's like a big office park. If you've ever been to like a college or university town, you see a lot of them everywhere. But I called the lady and I wanted to see if there's any kind of, outbuilding for industry, and I got the voice message. So I'm going to keep calling. If she calls me back, I'm just going to be straight up and be like, yo, is there room for foundries there? And if she's like, no, and that, corroborates what Iceberg was saying, I mean, that's a huge problem, right? And I mean, what are we trading at right now with this? Nearly $1 billion market cap. You're at 818 million. You definitely reach over $1 billion at 920, which was its high. You have low volume coming down here, still volatility in prices, but I mean, if this was news driven and then FOMO driven beyond a way. I think there's someone pumping this, honestly. You had, I think, 2 equity firms who were giving this like an $8 price target before their orders even came in. So kind of curious about that. Anyways, that's Qubit for right now. Trading up 11.9% at $6.91. The biggest issue, that would be a short. That would be a reason to short this thing, right? I mean, 818 million is crazy. I think thin film lithium niobate is super interesting, but you also have, advancements in silicon for photonics chips. And why I believe photonics integration is the future, no doubt. The question is how long? And this is what I was bringing up with the stock itself when it was running at like, what, 215 or something like that, like around this area. And, right now to have an 815 million market cap, it doesn't stay there. And especially the news comes out that they don't actually really have a foundry. They have some kind of like just little research facility that costs them $2 million. I mean, this thing will tank. But you also run the risk of them saying, hey, we got the foundry up and running, which again would be a very small kind of research facility, and the market doesn't read any deeper into it and it kills your short. Yeah, the timing is hard on this, I think is what it is. And this will be news driven without a doubt. All right, let's, first let's go to the break. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Welcome back, everyone. Yeah, so people talking in the den about what I was just saying with Qubit and calling the people. That was not, I'm going off of research at a place called the Iceberg Research. And if you want that article or that paper they did, I will send it to you. You just got to email me. I already sent it to some people. But it's important to corroborate because every time short sellers do stuff like that, I mean, obviously they have a major bias, right? So you just want to check to make sure it is. But it is true, right? I mean, it kind of points to it again with only $2 million expenditure for building out a foundry. That doesn't make any sense. Anyways, all right, let's move on here. Take a look. I'm going to pull this over here. Why not? This is the Beige Book. Let's talk about it a little bit. Again, Powell just spoke earlier today. You can just kind of run through it. Things are still pretty strong. People expecting strong demand. There's a lot of pressures that I think are inflationary right now. And I'm interested to see kind of what the position of the Fed's going to be starting next year. I mean, you just had, China just embargoed, gallium and germanium, I believe. Gallium is, I think they produce nearly 100% of that in the world, and then germanium is around 50%. And these things are used in, these are prime materials for how we're trying to build out our economy here, which is this hyper-tech economy, right? Bringing home manufacturing at least to some capacity, and now that's going to be even more expensive with these kind of deals. So we'll talk a little bit about this. Economic activity rose slightly in most districts. 3 regions exhibited modest or moderate growth that offset flat or slightly declining activity in 2 others. Though growth in economic activity was generally small, expectations for growth rose moderately across most geographies and sectors. Business contacts expressed optimism that demand will rise in coming months. Consumer spending was generally stable. Many consumer-oriented businesses across districts noted further increase in price sensitivity among customers, as well as several reports of increased sensitivity to quality. Spending on home furnishing was down. Contacts attributed to limited household mobility. Demand for mortgages was low overall. Makes sense. Though reports on recent changes in home loan demand were mixed due to volatility in rates. Commercial real estate lending was similarly subdued. Still, contacts generally reported financing remained available. Labor market employment levels were flat or up only slightly across districts. Hiring activity was subdued as worker turnover remained low, and few firms reported increasing their headcount. This thing is bizarre as well, because the amount of job openings that are having their genesis right now on things like LinkedIn and Indeed, it's insane, the number. And obviously those positions aren't really there. I say obviously, I would say part of them are. There's a nice, really good expose on that, where these hiring managers, the companies have no desire to actually bring new people on, but they're so underworked to some certain extent. The staff or the employees are so overworked that it helps in morale, or this is their theory at least. But that kind of stuff screws with his monetary kind of analysis here. Prices rose only at a modest pace across Federal Reserve districts. Both consumer-oriented and business-oriented contacts reported greater difficulty passing costs on to customers. Input prices were, and this makes sense. I mean, prices have increased exponentially, and no one's wages have really gone up at all. There's no hiring, that I think is really going on in any major way. And if it is, it's not for, elevated, income levels. And so I think people are getting kind of strapped for sure. And I know a lot of people, and I know I'm friends with people who are in all income brackets and stuff like that. And a lot of people are strapped even at some of the higher end income brackets. Very interesting stuff. This is still a strong economy, without a doubt. I think, again, Trump's inflationary to some certain extent. Whatever China just did to us is definitely going to be inflationary. And the U.S.'s response to that was like, this is why we can't rely on China for everything. It's like, yeah, totally, but where are we going to get these materials from? Now, America has like the mandate of heaven in some capacity because we always find some large deposit of the stuff that we need. Like, we just found that massive lithium deposit in Arkansas. So, hey, who knows? Maybe we could get our own and dig it out, or start dealing with other places within Asia that have large gallium deposits and stuff like that. But this can be an issue going forward, in the beginning 2 quarters of next year. And I do see kind of a correction because of these things. I mean, this is still a really strong market. They still want 2%, I don't know if you necessarily get it. And core is the thing that's kind of being a little bit elevated every time CPI comes out. So, yeah, we'll see what happens. Kind of interesting stuff for sure. What else? Let me see here. I got a lot to talk about today, but it's all about scheduling it out. I guess, the United Healthcare CEO, that's unfortunate, like in a major way. You had Chewy come out, built that. I'm gonna find something. Let's talk a little bit about MSTR. This stuff is getting funny, right? So, look at that, right? Up 9.18%. I was talking with an acquaintance of mine today. He has been talking about Bitcoin, I'm telling you, since I can remember. This is like 6 years, 7 years, something like that. He was paying his employees in Bitcoin. They could forego some of their base pay in Bitcoin. That worked for just about everyone involved. But I was bringing up this thing where you're paying an even higher premium right now for MicroStrategy compared to its net asset value, which is kind of really just the number of Bitcoin that it holds. There's something around, you buy a share yesterday, which is around, I think we were trading at like 340 or something like that, around 360, and you get $171 in Bitcoin for every share of MicroStrategy. I mean, this is still the case. Obviously, they haven't added any more MicroStrategy, but it's trading at $405. And I'm talking to him about it, and we were discussing how this goes forward, right? Because that you're trying to do price to net asset value to some capacity. That's not necessarily what you're doing with the number of Bitcoin to shares, but you can get to that point as well. And the only thing I can think about is that this is literally just a liquidity premium, because you can't put Bitcoin in these funds, right? You're going to have to go through MicroStrategy. I think as well that everyone is so hyped into Bitcoin. I mean, I'm hearing granddads talk about the stuff, right? And they have zero idea how to go on and buy on Coinbase, or, let's say even put something, into cold storage or something like that. I mean, that can get a little bit technical. And this is basically like the kind of normie proxy for Bitcoin. But I am nervous to get into something like MicroStrategy because of how high of a premium it trades at, right? And if you keep adding Bitcoin to it, which Saylor is definitely going to do, that gets kind of worse and worse, right? You pay a higher and higher premium. And I think long-term, this is an interesting play, because I wonder partly if Saylor is trying to do some kind of treasury, right? Where he has this massive amount of Bitcoin and you start developing some other kind of stablecoin pegged to it in some way, right? I mean, as it stands now, you would need Bitcoin price to legit double for price to equal net asset value. and how long does that last for? In that time, if the news kind of like simmers out, which it kind of does with Bitcoin, right? You get these massive run-ups and then run-downs, or really stabilization a little bit lower from the run-up. You can be caught in a bad situation in bag holding MicroStrategy at these levels. But it seems like he's still getting money in the racket that he's doing, and I call it a racket not because I think it's bad, I mean, it's actually pretty smart, but these idea of these coupons, right, at a 55% premium, zero yield convertible bonds. Now Mara's doing it. And now another group is doing it to buy more Bitcoin. We're gonna talk a little bit about Ripple too, and some bills that are trying to go through Congress regarding Bitcoin when we get back from this break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everyone. We're just talking a little bit about Bitcoin, but I want to go back quickly because I said something about U.S. having the mandate of heaven, meaning that every time we lose access to some kind of resource, some like random farmer finds just the world's largest deposit of it. And Jambalaya in the Den actually did send this from HuffPo, that's a throwback for sure. But they have a ton of it in America, apparently. And they found massive, massive deposits. It's from March of this year. Kind of funny. Yeah, it's nuts how that works. Anyways, we go back to the MicroStrategy thing. I don't really have much more to say on MicroStrategy other than it's trading at a major premium. If you want to get into it, you like it, I mean, really, I would probably just buy Bitcoin instead. Talking about like the legitimacy of the cryptocurrencies and really more of like the blockchain themselves, it kind of gets hard at a certain point to, it has run up constantly, right? I mean, you're getting at least some kind of like TradFin adoption of it. You have a Senate right now that is extraordinarily pro-Bitcoin. Trump is in theory pro-Bitcoin. It gets to a point where it goes out of obscurity and it becomes this kind of, it has a legitimizing effect to it. And I don't think Bitcoin is the coolest crypto or anything like that. It's not, it has that big shared backing of value, and, in reality, a lot of this stuff I think initially started as some kind of just theory play on what value was. And, it has scarcity to it. And that's what we kind of use to determine value, right? And but you can't deny that the thing's gone up like 100,000. Like I remember being I think I was like literally in 8th grade or something like that, playing Minecraft with a friend, and he was a few years older than me, and he had bought Bitcoin. It was like $160 at that time, and I had some money that I had wanted to invest, right? And he's like, dude, don't even think about it, right? Like just do Bitcoin, and I didn't do that. I think I bought like the SPY or something, or the SPX or something like that. If I had held on to that, it would have blown up, right? And again, we sit here all day and kind of argue against it. And there's a lot of things I have that I feel like are kind of bearish against the concepts of Bitcoin. But you have massive floors being built here, and things like MicroStrategy, in Mara. Obviously, you have things like BlackRock who are trying to put ETFs out on it. They're talking about Ripple ETFs. They're talking about Ethereum ETFs. Like there is adoption that's going on here. And then you have this freaky little bill that was going through. I was told Biden vetoed that, but do not quote me. That was someone else who told me that. But this is the Bitcoin Act of 2024. If this is the case that Biden did veto it, right? That doesn't happen again when you get someone, like Trump in office. So let me see here. So Section 5 is Bitcoin Purchase Program. Is the Secretary shall establish a Bitcoin purchase program which shall purchase not more than 200,000 Bitcoins over a 5-year period for a total acquisition of 1 million Bitcoins, conduct purchases in a transparent, strategic manner to minimize market disruption, okay? And then hold Bitcoin acquired under this section in trust for the United States as provided in this section. Now, I think overall you still get problems, right? Meaning, like, when does profit get taken? Are there regulations on that? I mean, what if Saylor, if he had no grander idea of, like, creating basically some shadow treasury to some certain extent, what if he just sells it all, right? I mean, you get a massive problem, you flood the market. There's definitely some things where this is not controlled in a major way, right? And that's an inherent risk with it. But if you want to talk about just legitimacy of blockchain in general, I was kind of talking about this yesterday regarding Ripple, and Ripple was blowing up. I think it's come back down a little bit. Give me a second here. It's saw 3% today at 244. But this is kind of weird. I was talking about pretty often, like, or consistently, like, don't buy this thing on Ripple for right now, right? I think this is a big pump and dump. I think we're going to see it dump pretty soon. There are too many fake AI edited ads out there right now for buying Ripple. And when there's some legitimate person speaking about it, they always point to the adoption of Ripple for cross-border payments, right? And so JPM brings this out, right? Unlocking $120 billion in cross-border payments. This is very recently. Let's scroll down here a little bit. Again, if you want this, I really recommend reading it because it's just kind of interesting. So you're talking here, this is Ripple, right? So this is the XRP, cross-border payment infrastructure intended to use cryptocurrency XRP as the settlement instrument that is, hyper bullish on Ripple itself. What they want, which is, full phase here, Ripple is not really achieving right here, right? You have finality to some certain extent, although that doesn't seem like it's so much in favor, even though it is fully transparent and instant settlement. High volatility of XRP is a major problem. So that is kind of my big argument with Ripple. Like, let's say they use the, that Ripple blockchain to settle stuff, and they're using XRP to do this. Can you do that when you have such high volatility? Like, no, you need to control the number, really, of that currency. And with these guys buying this stuff, being like, oh, it's going to go up to like $3,000 once they start using it for cross-border payments, like I can't see why they would buy something or utilize something that is so volatile. You need to bring it, to be stable, so you can kind of predict that kind of stuff. Unless, they just end up, someone just forks Ripple. I mean, I could see that happening as well, and then you're really kind of out of luck as an XRP bag holder. So the point in me saying this is that the things with blockchain are coming. They definitely are. Things like digital currencies, things even like cryptocurrencies, they're here to stay in a major way, bar some EMP that wipes everything out, right? And you're seeing this kind of like acquiescence by the larger regulatory bodies, and it's slow for sure. I mean, you have the SEC obviously allowing large companies to do ETFs on it. You have the IMF, who tends to be a little bit more opposed to it. We saw that with El Salvador, asking them to kind of divest a little bit in Bitcoin. But it's just what I've seen growing up the entire time is this argument against the stuff. And then a new thing gets broken, a new price gets broken, or someone else adopts it in some different way. And then that starts up again, and it gets broken again, and so on and so forth. And, I'm not going to sit here and tell you like this thing's just going to moon till kingdom come, because there certainly is stuff that could happen. I mean, this could get liquidated immediately, or they could just outright ban the use of it because they're not unable to properly control monetary policy. So, I don't know. That's kind of my whole spiel on it. Avoid Ripple. There is a lot of just fake AI stuff out there with Ripple right now. Just protect yourself on it. I think it's going to be a massive, massive dump. Yeah, we'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show. I'm just looking at this chart. I'm going to get off this, I promise. But this is just like this is the XRP chart, right? Big run up like this. And keep in mind, these things go over a month, right? They pile up like this over a month, they stay, and then it takes about a month or two for it to come right back down to the mean. And I don't know what's different this time. What is different? What news came out that everyone's like, okay, XRPs, this is the time. Like they're literally saying in one of the big supposed powers that be that support it, JPM, are like, this is the issue, but this is the intended result of everyone's thesis. You buy this thing, it's going to blow up in price. That's the issue JPM is listing out with Ripple and its adoption. Anyways, let's move on. I want to talk a little bit about some stuff in cybersecurity. You had Stoli Group file bankruptcy, vodka, because of a cyber attack. Pretty nuts. Bankruptcy consulting firm RK Consultant said, with assets estimated between US 100 million and 500 million against liabilities of US 50 to 100 million. It's going to be restructuring. It's not very good. 2-month-long cyber attack on its US operations is what caused them to voluntarily file for bankruptcy. So this is a massive issue. Okay, you have this coming out today. Let me throw this over here. U.S. officials urge Americans to use encrypted apps amid unprecedented cyber attack. So give me 1 second. You have Sentinel-1 coming out today. That's ticker symbol S, okay? You have some people, now they're not really doing, obviously, phone tech or anything like that. It's up 4% right now, trading at 28.67. You had some guys raise price target. You had others lower it or just keep it stable. They do an AI, I believe it's an AI sim. So, you know, you could run the kind of change, and they've done somewhat well. We'll talk a little bit more about Sentinel-1 here, but they've done, you know, pretty well over the past few quarters. And if they can hop onto this AI train like everything else is, you could see this stock rally. Implied volatility, I think, of like 11.8%. Either way, these are earnings after the bell today. So, okay. So amid an unprecedented cyber attack on telecommunication companies such as AT&T and Verizon, U.S. officials have recommended that Americans use encrypted messaging apps to ensure their communications stay hidden. This from NBC News. In a call Tuesday, 2 officials, a senior FBI official who asked not to be named, and Jeff Green, executive assistant director for cybersecurity at the Cybersecurity Infrastructure Security Agency, they both recommended using encrypted messaging apps to Americans who want to minimize the chances of China intercepting their communications. This is actually a massive tone switch, especially for senior FBI officials, because they hate encryption. They don't like when people use encrypted applications. Obviously makes sense. You can't like snoop into it. And they had that big debacle with the San Bernardino shooter because Apple wouldn't let them get in. So you're getting this mobilization, and I wonder if under Trump this, you know, CISA is going to get a lot more funding because people in his ear are definitely pro it. So why am I bringing this up? It's because I'm looking at NIST right now, right? I've been speaking about this here and there over the past few days, but I really want to take a closer look at it. It says Trusted IoT Device Network Layer, that is Layer 3, Onboarding and Life Cycle Management. IoTs are just going to be massive. I think it's something like they're expecting like $1 trillion in IoT value globally by 2030. These things get hit pretty easily as well because they kind of tend to be thin. And you've heard me talk a bunch about how IoTs there was something that came out where some guys, I think it was his washing machine, had uploaded 30 gigs of data over a month period to a server that was linked to China, which is insane, right? Who knows what the heck that is? But IoT is going to be very important because it's able to get novel data. And novel data is very important to keep building out large AI models. And they're the most easy to hack, really. So the reason why I'm talking about this is because you had the DoD as well say that we all need to start going into post-quantum TPM use. This was November 4th. They spoke about it. What a TPM is a trusted platform module. It's hardware that holds the keys. It's in everything. It's in your phone. It's in your computer. And right now, they are not quantum resistant. This can be a major issue because your keys are used to encrypt basically everything, right? So DoD Instruction 8500, inclusion of TPM for DoD services, DSysTig. So this is basically, again, like post-quantum kind of stuff. It needs to happen. And so I look and say, who is making post-quantum TPMs? And you take a look at this NIST article here. I know I'm probably going a lot of different places here, but follow along with me on it, because TPMs are in legitimately everything, right? And the new DoD directive, which was not the 8500.1, that was my bad. But the new directive was essentially that all these devices need to have it. One of the big things that is a problem with cloud, right, is they don't always use the TPMs on hardware. That's going to need to change if you're operating, with the DoD to some certain extent. It's going to need to use post-quantum TPMs on the actual hardware that's connected. This is huge, and I'm looking right here at Seals Q. You have Cisco, you have Cable Labs, you have Aruba, Hewlett-Packard Enterprise Company. But this is massive. This isn't just some, I think in my head, it's not some massive pie in the sky kind of thing, like, we're the post-quantum chips and yada, yada. These guys are getting put on collaborating vendors with NIST at a time where everyone is building up or about to start building up for TPMs, whether that's on individual devices, which is where Seals ASICs could kind of come in, or with the IoT, which we discussed is expected to grow exponentially, the value of that entire industry globally. And Seals Q is beginning in their phases to test these out. This is LAES, which is sealed backwards, trading off 4.47% at 39 cents. Now, that's a freaky one, right? I know a lot of people don't necessarily like things that are under $1. I don't have any position in this. I've been looking at it for a while. Stock chart is kind of abysmal, right? I do see the potential that if they, once they're done kind of creating and testing these ASICs, right, and the TPMs, which they're going to start doing beginning of next year, and it's positive, I think the news on that could be huge and could drive this equity higher. Now, again, full disclosure, I don't own any of this right now. I think it's still a freaky kind of chart, but we're talking a 9 million market cap for an industry that is, orders of just magnitude higher than that, right? So we'll wait to see kind of what happens. I'm going to be following Seals. If I do get into a position, I will probably, I definitely will tell you guys, but I'm not in it right now. And again, this is a subsidiary of W Key as well, off about 0.5%, trading at $1.98. Interesting stuff. And again, my whole thought here is I do think there's going to be some contraction. You're not going to see all these pumps and dumps like you're seeing right now going into next year. It's going to be stuff that's going to build out and help these kind of data centers in a major way, and just this new kind of digitalization that we're really pushing for. This kind of news, that would put Seals in that arena. Stay right there. We'll be right back for a short segment.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show. We got a short segment here, so I'm going to take a little bit of a look at SentinelOne. You have earnings coming up for them, up 4.41%. Still operating at a loss of $28.78. Price of the equity. I'm looking at their financials, their last 10Q. It seems like the loss is getting a little bit better. We'll just pull it over here, I guess. This is for the 6 months ending in July, so we're still waiting for for into September here. But you have a loss of 139. I'm assuming that's million. Yep, in the thousands. Their balance sheet isn't bad though. The current assets, cash and cash equivalents of 200, and let's call it 6 million. You got about 2.3 billion here in total assets compared to total liabilities of 713 million, and their total current assets covers total liabilities, which is okay. Revenue increasing, but this is pretty solid, I would say. And they have expanded out their purple, I believe is what it's called. So they expand, this is October 17th, so this is going to be reflected. Expands strategic collaboration with AWS, which is pretty good to deliver AI-powered cybersecurity. And again, this big AI thing is, that's what's driving a lot of this kind of stuff. It's called Purple AI, and then the Singularity platform within AWS Marketplace. So, I mean, I could see, again, implied volatility, I think of around 11.2 3%. So you have a potential to really move pretty high here. Already trading up 4.31% at 28.73. But kind of like the software services companies that are implementing the AI have been doing very well for earnings, especially with forward guidance. I don't have any. Might be too late for me to get in right now, but take a look at it. If you are holding for the earnings, I'm wishing you luck. Take care, folks.